Hello everybody, my name is True Demon and I am the Devil Stockbroker. And in this video, I'm going to be updating you on the stock market, starting with the SPY. First of all, I want to apologize for my absence for the last several days. I realize that I haven't posted a video in a while. This is just simply because I was away on a business trip. And then when I tried to record a video on Friday, I found out that my entire OBS Studio recording software has been totally screwed up. So I'm kind of like crossing my fingers, toes, and eyes, hoping that this recording works for you guys. But we'll just go forward and hopefully it all works out. So let's go ahead and recap what the stock market has done lately with the heat map. Risk on sectors with technology services, finance, and electronic technology all took a huge hit today. Health technology, energy, minerals, and a couple of other defensive sectors also did perform rather poorly. What this has basically signaled to me is that the market strength, the move in the overall market, has finally started to show some weakness, and we are beginning to see things begin to falter, which is something that we have been looking and waiting for months. I know that I have talked about this giant megaphone pattern that's here in front of you right now for a while. I'll kind of change those colors just to set it apart. But overall, the market, whenever it has hit the top of this channel, it has always rejected stiffly and come far further down on repeated attempts to break out of it. This is what's known as a bearish megaphone pattern, and it's a continuation pattern until eventually it breaks out of the top, indicating that the market is done selling off. I'm going to go ahead and drop down to the 1 hour chart, and I'm going to put a few other indicators on, starting with my RSI divergence indicator and my MACD with a price cloud oscillator by Peaceful Lizards. Both of these indicators are my bread and butter, and I absolutely love them. So let's take a look at SPY on the 1 hour. Right away, you see that we have this ascending wedge, which we immediately recognize as a bearish pattern. We've been trading with the 50 period EMA above the 200 for a while, so that bull pattern has been essentially in play since about October the 26th. We've known this. Now, the market has been pulling back pretty harshly a couple of times in a row now. We had this top here, we had a top here, and now we've had another top a little bit higher. But on the hourly candle, what do we see? First thing on Thursday, the market shot up really quickly from open, and then it got rejected off of the top of this megaphone pattern. That's what this trend line is. This red candle, this big red dynamite stick that you see here, is a rejection candle indicating that the market gapped up, attempted to break out of that that bearish megaphone, and got rejected harshly. And from that point on, the market only kind of just attempted to move up slightly throughout the rest of the day, kind of forming a bit of a triangle here. Now, I was watching on this particular day, and I was specifically looking in the afternoon, right at the very end of the market. And I was watching on my hourly candlesticks, and immediately what I saw in the market when I was looking at this, I jumped into the Discord and I pointed out that we had these two doji candles, these two candles right at the very end of the day. Now, this candle showed that we had a bearish doji, and it failed to recapture this high in the market. And then right after that, we started printing this gravestone candle. What's the difference? The doji candle is kind of like an inverted cross. It usually appears at the top of the market whenever the market has decided that it is starting to weaken up. And it shows up in the opposite direction at the bottom of the market to indicate bullishness. So where this appears in the market is what determines whether it's bullish or bearish. However, the gravestone candle, which is this one, you see a big tall wick and then a perfectly flat bottom. This is always bearish. And when I saw this gravestone candle forming, I knew that the market was done. So I immediately called this out to the Discord, gave everybody a heads up, hey, I'm going short. So we entered into a bunch of SPXU calls and SPY puts going out till I gave it a 30-day swing when I called it out, and we were pointing to a big sell-off going out to the end of January, basically. So we wanted to give ourselves a lot of time. Some of us only went till like the first week of January, but this is where the short entry occurred. And I've gone ahead and I put this short trade indicator on here to kind of illustrate where we place this. And a good take profit area that I marked out was the 200 period exponential moving average. That's this red trend line here on your chart, where we see a good, strong area of support. Now, some other confluences that I was looking at when I saw this was we had this lower low or lower high, excuse me, on the PCO indicator. You see how we have these two bumps on the fast moving average? That tells us that the market was starting to weaken up. There was less strength in this last move. We had a big move back here and another big move here, but the momentum tells us that the move was not as strong and that we were very close to the top of the market. Additionally, as we were closing or about to close this gravestone candle, I knew that we were going to get bearish divergence because I know how to look for this. Whenever there is a higher high in the price action, but there is a lower high in the when there is a lower high in the RSI, that tells us that there is bearish divergence. It means that the strength of the move isn't there. And that usually indicates that we are very close to the top of the market. I'll be putting out a video in the very near future called The Devil's Swing Strategy, which highlights my exact trading strategy to teach you how I spot these trades. But that is basically the synopsis of it is when we are in a trending market that is moving up, we see the MACD cross outside of the price cloud to the downside, and then we see an RSI bearish divergence. Those are all of our signals to go short. So because we got all of those signals together, we didn't hesitate. We went short on the market, and now up massively. Now, I want to give a big shout out to all of the members of Hell's Trading Floor, especially the mod team, who is always in the voice chat with us every single day. If you guys are looking for a community of really experienced traders to help you with your own trading convictions and strategies, to teach you things or to explain things that you don't know, please consider joining Hell's Trading Floor. I can't think of a better group of mods and traders that are willing, just so willing and so generous with their time to explain all of these market signals so that you can take advantage. And of course, I'm there every day helping to teach everybody in the Discord how to trade these as well. ScourgeBot actually called out some of these winning trades with massive put volume on Apple, Microsoft, Google, Amazon, Tesla, Nvidia, and SPY overall, with the top 3 SPY OIs all marking puts. ScourgeBot pulled out yet another massive win, calling out huge amounts of puts for near-term expirations between December 16th and January 20th. That sentiment remains bearish and appears to be continuing to build up going out till February and March. By the way, if you're new to this and you're seeing this for the first time, this is our Scourge Bot, the proprietary stock analysis bot for Hell's Trading Floor and our own personal mascot, which calls out relative volume and massive spikes in market flow, along with options flow and unusual ticker volume to call out big winners on both the long and short legs of trades. And I'm finding out that a lot of people don't even know that we analyze for FDA alerts for FDA approvals and denials, massive volatility and news halts for different tickers, and we even track OCC, that's the Options Clearing Corporation memos, and even bankruptcy court alerts. If this is the kind of information that's useful and appeals to you as a trader, I would highly encourage you to consider joining Hell's Trading Floor. Most of these are available to veteran members of the Discord, as well as the Demon tier member. And if you're curious about the other cool stuff that ScourgeBot can do, be sure to check out the video that pops up over my head. So now that we have effectively hit our take profit area, Hell's Trading Floor banked a whole bunch of winning trades on the short side, and now we're currently looking for a very short-term long trade because we got this crossover on the PCO right here. The RSI just broke through 30 and came back up pretty strongly. So there is a possibility for the market to bounce, at least in the short term, back up to retest this ascending wedge. So if we get a retest of this ascending wedge, then this is a signal to exit any long positions and then consider entering or averaging down on short positions. And this is what I'm doing. This is what a lot of the members of Hell's Trading Floor are doing. But please keep in mind that this is only for a short-term swing. This is maybe 2 or 3 days that we're expecting the market to bounce here. And the only reason is because it's going to take some time for the market to chop through this 200 period EMA. It's really strong support. So what you should expect to see from the market, at least for the next couple of days, is a short-term bounce off of this to retest this ascending wedge and then to quickly come back down and cut through or possibly bounce around, consolidate, and create a head and shoulders pattern or some other bearish formation, possibly bear flag, before it finally does break to the downside. Whatever we get, Hell's Trading Floor will be watching for it. We will be calling it out on the trading floor and letting everybody know what the play is and how far to take the trade. While I'm here, I want to go ahead and give a quick shout out to everybody who posted gains in the channel for the last couple of weeks while I was away. Boomer Assassins absolutely killed it with massive gains on both his cost average and his P&L. Prox GT with several winning trades in his portfolio, bringing up his account over 900% in just the last week. Neo, Apple, several Apple puts, and a bullish bet for Cosmos. Tip flickering with several SPY trades. Savvy trading with multiple winning base hits, emphasizing on that good discipline, excellent trading strategy, taking the small wins and keeping consistent. Chan Dagger with a 32% win on Billy. Tipped with a bearish bet on Bank of America. And Boomer Assassins again with a 226% gain on a huge swing on Apple. Congratulations to all of you guys for dropping these excellent winners. I'm going to quickly wrap up with the SPY over HYG divergence ratio chart really quickly for you guys and point out some very significant indicators to let you know that a long-term downtrend is coming very soon. So this is very simply just the SPY divided by the high yield grade bonds ETF. And what this tells us is what the stupid or the dumb money, the market, the stocks are doing versus what the smart money is doing. Everybody on Wall Street, the institutions that trade bonds, especially high yield or risky junk corporate bonds, are going to be making decisions ahead of the stock market and tipping their hand. This is a very effective swing trading tool to give you a good lead on what the market sentiment is on Wall Street versus what everybody is saying on social media. And take note that we have had 2 crossovers on the PCO in just recent memory with a lower high on the PCO chart. We've also had a crossover outside of the price cloud. This is one of the first signals for my devil's swing trading strategy that I want you to start looking for in order to track other trades like this. Next, we have an RSI bearish divergence, which is the confirmation signal for my devil's swing trading strategy. You can tell this by looking for a higher high in the price action, but a lower high in the RSI chart. And this just lets us know that the market has weakened on its last move in whatever direction it's going. When the market is moving up, you see the cross to the downside followed by RSI bearish divergence. That is your signal to go short. When you see the market is going down, you see the RSI and MACD both turn up with a bullish divergence. That is your signal to go long. So right now, everything in the market is telling us that the smart money is starting to sell big time. All of the money is flowing out of SPY. HYG is starting to get more and more nervous. And we can tell this by looking at HYG by itself, and we can see that the momentum indicator also had 2 big crossdowns, and lately every single push to the upside has shown decline in the momentum indicator. That means that we are due for a big move to the downside, and HYG has a gap in this area, along with the SPY. The SPY already moved through its first gap that it had created on a giant impulse move, but it has another one right down here between 390 and 375. There is a huge area of just nothing but air between this price level. So once SPY decides that it's going to enter into this area, it's going to move down very, very quickly. The VIX has been showing that it's been getting a lot jumpier and a lot more fear coming into the market from big investors. And more institutions are willing to use the R word every single time they step onto the podium. Risk on sectors are underperforming, with the Qs creating a double top formation while the Dow Jones Industrial Average is channeling to the upside. However, even the Dow Jones showed a lot of weakness on its last daily candle, indicating that the market overall is extremely fearful. And right now, because the Dow Jones has created a double top formation on the weekly chart, this tells us that despite all of the money that's been moving into the defensive and the industrial sectors, there is still more weakness to come. So right now, Dow Jones is where most of the money is flowing to, and there's a lot of fear in the market. On the weekly, we're due for a PCO cross to the downside, which usually is extremely lagging. Typically, by the time we see this cross down, half of the move is already done. So I'm also going short on the Dow Jones for a 2-month swing. I'll be looking to average down on my trade, hoping that the market will bounce very slightly in the second half of this week, where I can enter into a stronger short leg for the trade going out until January. That's going to do it for this market update. I want to thank you guys for watching, and I look forward to seeing you next time. But until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.